Days left to go before Union Budget 2020 kicks off, and the question on everyone's mind is, what is the government going to do about taxes, both direct as well as indirect? Well, there's a lot of talk about whether personal income tax are going to be reduced. What about indirect taxes, considering GST is now outside the purview of indirect taxes? Two experts joining us on the show right now. We've got with us Mahesh Jaising as well as Anuprita Mehta to answer exactly those questions. Both of you, thank you so much for taking the time out and speaking with us today on ET Now. Let's get the elephant out of the room, shall we? GST, are the niggling issues, out of the way, or do you think there are still a lot of teething troubles to deal with?
Well, GST has been an exciting journey. It's been 2.5 years into GST. I think a lot has been done. A lot more will be done. We've had about 38 GST Council meetings, and like you rightly pointed out, GST is no longer a budget exercise. It is a part of a decision making that's done by GST Council that has a representation by the center as well as the states. So while that takes place on a periodic basis, those meetings, so we don't really have an annual event of sorts. And therefore, coming back to the core of GST, how's the journey been? I think you look at the journey on 2-3 aspects. On the policy side, on the compliance side, and the tax administration side. I think while we'll get into some level of details, it's been so far so good. I think there have been a bunch of notifications and clarifications, close to about 450 of them in the last 2.5 years. So I look at it quite positively that the government has been engaging with us in industry and working on some of the changes. So I would think the policy changes are still sort of underway, but so far so good. Anu, what do you have to say about that?
I agree with you completely, Mahesh, because though we see that there are multiple notifications, but I think it's all to help the industry, get used to the new regime or even the improvisations that are required. So I think government is very receptive to the advocacy that the industry is making, and that's a positive measure.
Would you say that still a lot needs to be done? Because, like you rightly said, it's very much a work in progress even now. Issues are not really resolved.
Yes, absolutely. So we are at a very nascent stage of GST, and the way I would like to see GST, at least in the near future, would be rationalization of the tax rates. There are also a lot of capital intensive input costs that are not creditable. So that is really hampering our Make in India concept. So capital investments are not happening. Most importantly, around 30-40% of our consumption as far as the manufacturing units are concerned in terms of electricity or petroleum, diesel, etc., they are not within the ambit of GST. So I think the roadmap for the future would be to bring all these elements into GST and make it a one complete regime for more efficiency.
Mahesh, is that the outstanding list, or is there more to it?
Absolutely, that was the going in position, but the government very clearly said that immovable property, which is the capital part, I think that's the focus from what Anuprita is making, not really the plant and machinery, but that structural part. Oil and gas has also been outside the net of GST, and I don't think we'll expect anything in the upcoming budget, because the government also said, let's see how this progresses, and once the revenue is on a standard stream, then they could look at getting the states also to buy in for getting the GST in for these other set of outlier products. So not outlier, but very, they may be only short in number what is out, but on value terms, they're significantly high.
Yeah. Anuprita, is that the solution, putting just everything under one ambit? And I mean, is it really the feasible idea? Because it's not really an apple-to-apple comparison. We're talking about different product categories here.
The main crux of GST is to get seamless credit of all your input taxes against your output. So today, because electricity or petroleum products, etc., are not within the ambit, there is a cost, which is a sunk cost, which is not creditable. And to make it more seamless, I think all these will be built in eventually. Of course, India has its own complexity, and every state has its own unique features, again, which the government has to be cognizant of. But I mean, do you agree?
I must add, internationally, any VAT system, whether it's Europe and the other countries, all products which are subject to a GST, and if you buy it as a B2B buy, as we call it, you would be entitled to a credit. So I think that's probably the policy part of rate of tax as well. Anuprita brought that topic up. I don't think the budget's going to look into a rate change, but yes, that's been the buzz, and looks like that's the next part that the government will embark on. Not necessarily to augment only fresh revenue, but to just keep things more simple than a multi-tiered rate structure.
But the invoicing has been the issue here in any case, right?
Oh, invoicing, I mean, it's interesting that you raise invoicing because we are at the cusp of what I think is the most path-breaking reform after the GST law in India, which is e-invoicing and actually real-time reporting, as it's called worldwide, where the government has, over the last several months, been in consultation with the industry and announced its plans to do an e-invoicing. The target date is April 1, 2020 for those businesses above 100 crores of turnover. So that's clearly an area of focus what most of us in the industry will be focusing on in the next few months. Anu, how are you dealing with it?
Oh, we are very busy currently with testing our ERP systems. Actually, there's a lot of change that is required.
Yeah, you're on the business side, so
Yeah.
you're actually experiencing all these issues,
yes.
right?
And we are looking at our business processes, the transactions which need to, follow this new invoicing system. There are a lot of vendor analysis because, it's just not enough that you are in that e-invoicing phase, but the entire ecosystem, all the constituents need to be, So, we are looking at our vendors, more than 100 crores, less than 100 crores. So there's a lot of analysis that's happening at the moment. The government has also introduced e-invoicing system for voluntary adoption for industries above 100 crores of turnover. So we are actually gearing up to that as well. And I hope that the government will accept our inputs and then actually build in those in the implementation phase. So realistically, I hope April 1 is the timeline because lot of work needs to be done at the industry end and as well as at the government's end as well.
Mahesh, what can the government, the budget cover? I mean, let's leave GST and we'll come back to it because GST is, not just a work in progress, but an ongoing discussion forever. But what can the budget cover under the purview of indirect taxes?
I think let's also remember that it's not the first budget after GST. The last 2 years actually demonstrates that the budget will have the GST law amendments that will be announced. So it's not going to be a GST agnostic sort of budget. There will be legal changes that we will be looking at the fine print. This was actually announced in the last GST Council meeting that the legislative amendments have been accepted and are worked on. So it was a very short statement in the press release, but legal experts like us know that we are getting the GST law, the changes that are going to happen. So to that extent, I would think it's not completely irrelevant on the budget. Also in the budget speech, I'm expecting the finance minister to actually make certain announcements on how the collections of GST has been, how's the journey and the vision for the next 12 months from a central government perspective, and also to touch upon technology reforms. Most of these in the protocol would be that they're accepted in the council and the finance minister would share that with all of us. Well, that's one part of it. I think the other part is customs. And I think within customs, we expect, as has been the case over the last many years, changes in 3 buckets as I would look at. Rate changes, policy and law changes, and changes which will enable more trade facilitation. So I would look at the budget from a customs law on these 3 elements.
Expand for us, what could the government do in these 3 categories?
I think clearly from a rate change perspective, it is more in the backdrop of trade measures that are taking place worldwide and India's focus on the Make in India program. That's 6 years on this program. I believe that there will be some rate changes where you're encouraging local manufacturing of certain products. Now, back in November, I gather that there's a bunch of officers and senior officers who have been spending time in terms of analyzing which products could be encouraged to indigenously manufacture. What that does is that you increase the product rate on the finished product and keep the components relatively low, so you're encouraging manufacture, which gives labor and all of the ecosystem benefits. So I think rate changes is in that category. I would think we need to look at whether there's some changes on the EV space, which is the electrical vehicle space, because there's a phased manufacturing program announced by the government, so it's not necessarily very speculative. So we need to see on that. We believe that there may be some of the consumer products which are in the lookout, whether there may be a rate of tax change. And the third category I would think is on the electronic product space, because there's no secret that our electronic import is significantly large, and the government has been engaging with industry to see how do we bring in more policies and enable them to come and manufacture it's always a debate as to what level of manufacturing can you do. So I would be keen to watch these three set of products, Ayesha.
But Anuprita, I mean, we all know that, we're going through, the economy is going through its phase of downturn right now. Would it be as easy for the government to actually slap higher taxes on consumer-related products? Because that's the end of the economy which actually needs the leg up and the fillip.
Right. So I don't think at this juncture, even though revenue collections are really short, but given the economic scenario,
yeah,
the government,
I mean, it's like a catch-22 situation.
Yeah. So immediately, I don't think any rate changes would happen. What Mahesh was saying, and I completely allude to that, is to promote the domestic manufacturing. What government would probably look at as a broad policy is to hike the customs duty for the imported products. Wherever there is lack of a particular raw material for domestic manufacturing in India, government would try to reduce the customs duty rate for those raw materials. So this will all give an impetus to domestic manufacturing. So this is more at a policy level, and of course at each industry level, government will have to really go into the nitty-gritties to see how this pans out.
So what imported products could be higher? Because there was talk about, customs duty on alcohol, for instance, be increased for imported alcohol, that is. Could that be slapped on gold? Could that be slapped on the other non-essential, quote-unquote, commodities or goods?
Yeah, I mean, the exact products that you mentioned, even on essential products, I mean, something like a sanitary napkin, okay? If you import from China, it's really very cheap, and it really then hampers the prospects of domestic manufacturing. So if the government hikes those import duty rates, on sanitary napkins, and also probably lower the customs duty for import, for the raw materials which go into the making of these products, that would really help. So it's not just the non-essential commodities, but even the essential commodities that the government needs to look at.
What else, Mahesh, can the government address when it comes to indirect taxes?
On the policy side, one of the important reports that came out in the month of November was the WTO report on our export schemes, where there was a finding, not an observation, that these schemes are probably violative of the WTO's accepted export schemes because our per capita income has gone up. So while that's a good sign that the per capita income has gone up, it doesn't allow us to operate under some schemes. So while the Indian government has gone into appeal, which is what most of us did think, there has been announcements by the government already of them addressing and bringing out some iterations to some of the export schemes. So I expect the budget to probably have some high-level announcements around this, because this is really going to be dealt in the foreign trade policy expected in April. But I would expect some announcements around this front. Anuprita, maybe you, about the MEIS and the road TEP scheme, as we call it, any thoughts?
In our sector, we are using the MEIS scheme very aggressively, and with this WTO issue, and of course there is a new scheme, RODTEP, which will be likely implemented from 1st of April under the new foreign trade policy. So the government is currently collating all the data from the industry players in terms of analyzing what kind of benefits could be given, as a percentage of exports, etc. That work is underway, and we're really hoping that from April 2020 we'll have a new scheme which is as good as the current one.
Sure. Yeah, you were about to add something.
To add, I think the government has also announced a recent scheme called Manufacture Under Bond, not only to encourage only exporters, but also those companies having, domestic supplies. And the design of the scheme is followed in the US and Europe and many of the countries, so it's very compliant to my assessment. But I do think that this scheme, maybe there'll be some announcements and some clarifications that we expect in this budget, because that's an area that the government has actually been reaching out to industry saying, come under the scheme. What the scheme does in short is that if you import goods, manufacture and export, you literally have no duty payment at the time of import, and the exports are anyway zero rated. And for domestic supplies, you're actually deferring duty. So I would think that this is a scheme that will find some mention in the budget. I do think the other schemes on special economic zone has also been in works, where the government is working on a revised SEZ policy or making some iterations based on a committee recommendation that they've received. Maybe there'll be a passing reference right now because the SEZ Act is an independent act and it's not part of the Indirect Tax of the Finance Act per se, Ayesha.
Sure. Let's get back to GST because, everyone's going to have hawk ears on what the collections are, what are the projections, and we all know they've been falling short. I mean, it's no mystery here. Do you think maybe a revision on that 1 lakh crore rupee targeted mark or something like that could come about? I mean, will the government be a little more realistic this time?
I think the government, the announcements on targets may not necessarily come out in great depth in this budget because that's a GST Council announcement, but there will be reporting. I think the government is bullish when going back to e-invoicing that we talked about earlier, because you look at countries that have brought about real-time reporting. Italy's brought about real-time reporting, and we believe they've got $2 billion of revenue additional every year. So I think the government is looking at some of these measures to increase their revenue, not necessarily by just increasing rates and making tax compliant companies pay more tax. They want to ensure that there is no leakage of tax revenues, and therefore these schemes are more about ensuring more compliance, and that's why they still believe that these targets are indeed reasonable. So I think at this stage I don't see a need for them to course correct the target and number crunching that they've done.
Yeah.
What do you feel?
Yeah, absolutely. I mean, this e-invoicing and e-returns is going to increase the compliance manifold, and this in a way will augment government revenue because there won't be any leakages, no false ITC claims and things like that. So the digital way to go, I think, is the right way to curb all these malpractices.
It's all declared and accounted for. Yeah. So then in that sense, Mahesh, would you say that, these niggling issues and this headline that we always, have fodder to talk about, that GST collections are falling short, that's going to be done away with? That'll be a thing of the history because e-invoicing will sort of completely evade that and negate that?
I think so, but I think it's going to be a distance away because e-invoicing is only for companies above a particular threshold. Yeah. And actually those companies are seldom the ones who are not going to be compliant. So, I mean, it's not that the rest aren't. There are outliers that unfortunately create some of the problems. I think that's, and in terms of tax collection targets worldwide, even after bringing in a new reform which is more tighter in the scheme you'll probably have fresh targets and conversations. So I think this will continue to be an area that you'll be talking about as well.
The coffee table conversation or
Absolutely.
Studio conversations for us. But Anuprita, when it comes to really, as an industry, because you're sort of at the consumer end over here, if you really had to give, say, the finance minister that one out-of-the-box idea on how to garner more indirect taxes, tax collections that is, what could that one idea be that the government could think at or look at this time?
Yeah. So again, it may not be a very low-hanging fruit, but I would think that bringing in all kind of commodities or your input costs under the ambit of GST is the way to go. It may take time. It's not going to happen in the immediate budget or even in the next few years, but eventually we need to get to that level.
Get to a more mature GST environment and then probably look at the GST numbers. Yeah. I like that suggestion. Like Anuprita mentioned, that may not happen immediately. I probably don't want to give any fresh ideas. I think the idea of e-invoicing and the robust tax compliance which has been embarked on itself should result in benefits, Ayesha. So that's an area that I think we will expect something around this time. I must add the topic of GST is a little incomplete without talking about 2-3 very niggling issues which may seem like they are micro issues, but they impact industry. I think exports ought not to be taxed. That's a no-brainer. That's a stated position by the government. We've had export advance rulings on some matters which suggest certain back office services will not qualify to be an export. It's a $100 billion plus industry, and saying that 18% ought to apply is anyway not been the intent. So it's not that, but nevertheless these rulings created ambiguity. There was a circular issued by the government. The government, based on feedback from industry, has withdrawn that circular. I expect that in the budget, maybe in the Finance Act, in the GST amendment bill, there would be some things to address this concern of exports which are, in a way, a tax officer would come and say, hey, is this taxable because of this ruling? I would put that as, technical issue 1. Technical issue 2 is, large companies, FMCG, electronic, have post-sale discounts and schemes, which is a very common aspect, which there's also been some level of ambiguity. Maybe you want to talk about that since it's closer to your...
Yeah, so pharma industry, this issue is a very hot topic. No longer that much hot topic because the circular was withdrawn.
Pharma industry, real estate, finance, you're all of it
I'm
somewhere.
All, yeah.
Yeah. Well,
right. So the government did introduce this tax on the post-sales discounts, but it led to a GST leakage, and with a lot of industry representation, now the government has withdrawn the circular. So as I said earlier, we are hoping for more clarification, but for now I think it is okay.
Sure, yeah, you wanted to say something.
No, I was just saying, I think that just building on that, while it's kind of addressed that the circular is withdrawn, industry still has disputes. I think the short point is it's 2.5 years into GST. When we say work in progress, it's not work in progress that the law changes every day. It's just that now companies are realizing what tax positions they've taken are now getting questioned and tested. Rightly so, the tax administration needs to do tax audits. But that's where the engagement with the government is, that this state is interpreting it in this manner and this isn't. Let's nip it in the bud before we get 10 years into GST. Nobody wants a litigation. Clarify it one way or the other. So I think that that's the mood and sentiment from industry. It's not about asking for any specific additional financial benefit. It's just keeping it simple and ensuring you're following the destination-based tax principle, and any business incurring a GST cost, you ought to get the credit. It shouldn't be, oh, this was in the wrong state, you have multi-state operations. So those are the apprehensions that seem to be building up now, Ayesha, and I think the next 1 year I would expect GST reform to be focused on that aspect.
Yeah. So vigilance has become stronger, is what you're trying to say.
Certainly. The tax audits, investigations have started. So is it fundamentally wrong? No, it isn't, because any tax needs to be audited and assessed. I think for industry it's come in a little sooner than what
they expected.
They expected. One. Two, I think what's come as an area which probably needs to be looked at is many of these audits have started as investigations, which actually ought not to be the case. It should just be a simple audit query and response and keep it simple. But I'm sure there'll be some course correction, and there's a hope there's a course correction, because otherwise a lot of energies get spent when an audit is done in an investigation format.
Yeah. And on the point of the audit, industry is really apprehensive because the government now has transaction level data, and it's all online, and they are using analytics. So it's going to be more intelligent.
You can't hide.
We never meant to hide. But
no, not you, as in just generically.
Right. So the questions that are going to come from the tax authorities are going to be very analytical. So it's not going to be just number crunching and reconciliations. So we have to be very sure of what we are responding. Also, because of the multiple registrations, state registrations that we have, we are going to face multiple audits. True. And the effort is going to be manifold. I hope that the government is, considerate, at least for the first few years, on the genuine mistakes that may have happened because of the teething issues, and everybody was learning the law. So that's the only hope that I have.
I think to build on that, the paradigm shift of GST has always been, and I've said this over the last many years, that services sector, which we just had a one-point contact, central tax. The sheer nature of GST is that it's a state tax. And now if you're a service in the services business and you have operations, say, in 10 states, you've taken registrations in 10 states, you're doing compliances in those 10 states. So to me, that's going on. But the larger issue is your tax positions are now in 10 states. And I think the nature of services is so intangible that the queries that come up are more unique and company specific. And that's really the area that these audits and investigations are a fair bit of worry, because no company, give and take, would have done a supply without paying tax. It's just that, can there be a debate on the place of supply and stuff like that? That's an area.
And where do they garner proof for something which was done, I don't know, many years back perhaps, Yeah.
I think that's the tricky part, and it's not India-specific place of supply rules, because how do you apply it for services, because there's really no shipping bill or an e-way bill and others. Well, I think keep it simple, follow the contracts. Those set of documentation should by and large get you home. And to be fair, those service sectors that are fully taxed, there's really no real revenue from the government standpoint. And the ones that are not taxed and are outside the ambit of GST, I would say like the banking sector, the healthcare and education, more often than not, it's less debatable as to where was an interest income earned, or where is the college providing an education institution, or where is the hospital doing a treatment. So maybe it's just the nature of those services itself that make it a little easier. So while in one breath I did caution that service sector will probably have it a little bit more challenging than the product sector for the next 2-3 years, the other part of me does remind that it shouldn't be that complicated, and hopefully we'll be able to weather the storm.
Okay. Both of you, thank you so much for taking time out.
It's a
Lovely
pleasure.
speaking with you, and
Pleasure
we'll find out
being
in days what the finance minister has to do and say about indirect taxes.
Excited
Thank
to
you.
look forward to that. Thank you.
Thank you
It's a
so
pleasure.
much. Thank you,
Anu.
Mahesh.
Thanks.